You've probably heard of big corporations like Apple, Google, or Nike, right? Well, guess what? All of them have used tax havens to save billions. Apple once funneled its profits through Ireland, paying almost no tax for years. Google used the legendary double Irish with a Dutch sandwich tax planning strategy to shift billions to Bermuda, where the corporate tax rate is 0. And Nike? It parked its swoosh trademark in the Netherlands, letting profits sprint straight past the IRS. Crazy, right? And these are some of the richest companies on Earth, yet they often pay less tax than a small business. Hello everyone, I'm Momo from the Tax Universe. If you watched our last episode, you'll remember that tennis players are basically traveling businesses, earning prize money and sponsorships all over the world. And you guessed it, many of them also play this tax game. Just look at where some of the top players live. Novak Djokovic in Monaco, interesting. Jannik Sinner too? And wait, Holger Rune, the Danish rising star, also in Monaco? At this point, Monaco's starting to look less like a country and more like a tennis club with tax benefits. It's not just sunshine and yachts, it's a tax strategy. Because where you live can determine how much tax you pay or whether you pay any at all. So, what exactly is a tax haven? And how do these athletes and corporations use it to keep more of their money? In this second episode of Tennis and Tax, we will find out. The term tax haven comes from tax, as in your income tax, and haven meaning a safe place. So a tax haven is a country or territory where people or businesses can pay very little or even no tax at all. But that's not the only perk. These places also guarantee strict financial secrecy. Your income, your bank accounts, your offshore companies, all locked behind confidentiality laws. For a top athlete with millions in endorsements and prize money, that kind of privacy is gold. To be considered a tax haven, a country usually checks 3 boxes. It has low or no taxes, meaning very little income or corporate tax. It provides privacy through strict banking secrecy laws, and it offers stability with a safe and reliable government that won't suddenly seize your money. That's why places like Monaco, the Bahamas, or Switzerland often top the list. Now, not paying taxes might sound shady, but here's the thing. Most athletes do it legally. They use clever setups involving residency, companies, and a bit of creative accounting. Let's break it down. First, tax residency. Tennis players travel almost year-round, right? That means they can choose which country counts as their tax home. If they live in Monaco for more than 6 months a year, that means 0 personal income tax. That's why so many ATP and WTA stars move there. The difference can be massive. Imagine saving 30 or even 50% of your income just by living somewhere sunnier. Next, image rights companies. Many players set up their own companies in tax havens to hold what's called their image rights. That's basically the right to use their name, photo, or brand in sponsorship deals. So instead of the endorsement money going straight to the player and getting taxed heavily, it's paid to their offshore company, where taxes are close to 0. The player can then take that money later as dividends or loans, often tax-free. And finally, transfer pricing and internal loans. This one's a little technical, but the idea is simple. Just like big corporations, some athletes move their income through companies they control in low-tax countries. Because the money never officially comes home, it doesn't trigger high local taxes. And if they ever need the cash, the company can simply lend it back as a low-interest loan, perfectly legal and still untaxed. So when a top tennis star earns around $10 million from tournaments and sponsorships, living in Spain could mean losing about $4.5 million to taxes. But living in Monaco, they keep almost all of it. That's the real power of a tax haven. You might wonder, if they don't charge taxes, how do these countries make money? Most tax havens are small, resource-poor nations that attract wealthy residents or foreign companies to boost their economy. They earn revenue from business registration fees, luxury tourism, and financial services. For example, a small island that charges companies a few million in fees can see a massive boost to its GDP, even if its population is under 100,000. In short, rich people and corporations save billions, and the haven gets a steady income stream. It's a win-win for them. All right, now that we know how tax havens work, let's look at where the stars actually live. We'll check out 3 of the most famous ones, Monaco, Dubai, and the Bahamas, and see why they're so popular among tennis players and billion-dollar brands. Monaco, if tax havens had a Hall of Fame, Monaco would be front and center. Many tennis stars, including Grigor Dimitrov, Stefanos Tsitsipas, and Caroline Wozniacki, call it home, along with celebrities like Lewis Hamilton and Shakira. The reason is simple. There's no personal income tax. While players still pay taxes on prize money in the countries where they compete, their endorsement and investment income earned through Monaco faces 0 tax. That's a huge saving for top-ranked players who make millions off the court. And with sunshine, safety, and privacy all year round, Monaco offers more than just luxury. It offers financial peace of mind. Next up, Dubai in the United Arab Emirates. Tennis pros like Andy Murray, Elina Svitolina, and Alexander Zverev spend months training here every year. It's also the regional base for big corporations like Emirates Airlines, DP World, and even offices of Microsoft and Amazon. Dubai offers a dream combination: no income tax, no capital gains tax, and no property tax for individuals. Plus, modern training facilities, sunshine all year round, and direct flights to every tournament city in the world. For many athletes, it's not just a residence, it's a tax-free, high-performance lifestyle. And finally, the Bahamas, a tropical paradise that's far more than just a vacation spot. Some athletes and sports figures, including tennis legends who prefer quiet island life, have second homes here. It's also home to billionaires like Tiger Woods, Sean Connery during his lifetime, and companies tied to offshore finance and crypto trading. Remember FTX? It was based here too. The reason is simple. The Bahamas has no personal income tax, no corporate tax, and no capital gains tax. You can earn, invest, and sell, and the government won't take a cut. All you need is residency status and a tolerance for sunshine. So whether it's Monaco's luxury, Dubai's modern edge, or the Bahamas' island freedom, one thing's clear. Tennis players know how to pick their courts and their tax home. So next time you see a tennis star living in Monaco, remember it's not just for the glamour or the Grand Prix, it's also for financial freedom. Tax havens might sound controversial, but in a sport where careers are short and prize money can rise and fall, players are simply playing another kind of game, the tax game. Thanks for watching. Don't forget to like, subscribe, and stay tuned for our next episode of Tennis and Tax.